And for more on India's economy and government's efforts to open up to foreign investment, I spoke to Arvind Subramanian. He's a senior fellow at the Peterson Institute for International Economics here in Washington.
Well, the short answer to how the economy is doing is not good at all. Because growth, even after the crisis was around 9%, but in the last 2 years, it's steadily decelerated, and now it's down to a little less than 5%. So growth has declined dramatically, and at the same time, India has become very, very vulnerable in terms of economics. For example, inflation is still close to 10%. The fiscal deficit is about 10%. And the external deficit is about 4%. This year it could be as high as 4.5%, 5%. So there's a sense in which that, these numbers resemble a kind of Latin America way back in the 80s. So both slowing growth and macroeconomic vulnerability are why there is, the Indian situation is not good. Now, it must be pointed out that at the same time, India is heading into a major election cycle over the next 6 to 12 months. So essentially, the economy is in pre-election mode.
I think we understand that there is some uncertainty right now with India. The bigger question is, has India lived up to its potential? I remember back at the days when there was a lot of talk about China growing near double digits, and India was not far behind. What happened?
Well, what happened, I think two things happened. I think, one, the Indian growth model, the interesting thing is that both the Chinese and the Indian models of development in their own way seem to have run out of steam. The Chinese model, the investment-led, export-led model is kind of, running into trouble now. That's why growth is slowing in China. And in the Indian case, what's happened is that, this whole IT-led growth has kind of slowed down, both because the international environment has slowed down, but also because India is just not able to produce the kind of high-skilled labor that's necessary to keep generating IT. And combined with that, unlike China, there's been a real, the macroeconomic handling has been very poor. India has been spending a lot of money. That's created these big deficits, and therefore macroeconomically it's become vulnerable. So that's what I think, those two reasons why, the fact that the old development model is running out of steam, macroeconomically it's become very vulnerable, and of course there's a lot of corruption and serious governance problems which are putting off investors.
How can the government address this issue in the near term?
See, the irony is that in the last, I would say 8 months, the government has done a lot of opening up to foreign direct investment. Now all the laws have been completely liberalized. Foreigners can have majority stakes in a whole bunch of sectors in India in a way that never used to be the case. But, because the underlying regulatory environment is very uncertain, very unstable, riddled with corruption, foreigners don't want to come in. So that's the problem, and that is a very difficult problem to overcome, because it's about how can you get the government to become more stable, more predictable, less corrupt, and so on.
All right. One final question for you in terms of, it sounds like it's a public relations issue between India and a lot of the businesses, because as you're saying, there has been reforms that have been taking place, but the money hasn't come back yet. Are they just going to have to wait until after the elections?
It seems like, that people are going to wait until after the election because, pre-election, the whole policy environment it remains quite uncertain and kind of skittish and fragile. So it's unlikely that investors will make big investment decisions about, actually locating plant and machinery in India until, the elections are over and until things settle down a little bit.